Good morning, everybody. Wanted to prepare this video as a brief introduction or overview of our application for doing some deeper financial analytics on U.S. traded companies. So this is just the home page for our backend, and what really drew me to this was some of the data out there as far as the stock market goes. A lot of speculation over the past few years, easy money from the Federal Reserve, pretty much just printing money endlessly for, to boost the economy or stimulate the economy, whichever way you look at it. At its fundamental, it can be, it could also be damaging. So a lot of gray area there with stocks, and I think a lot of people in the public arena, such as Jim Cramer and the analyst on CNBC, really they do their bidding for Wall Street and the big banks, and not so much for the retail traders. So I wanted to create this as an opportunity, as a tool that they can use to better analyze these companies, and what's going on, and where is it valuable maybe to invest your money instead of some of those speculative stocks. So here's the homepage. I just have the disclaimers here. Of course, the disclaimers is basic information that we're not financial advisors. This is just a tool. It's public information. So we don't pick stocks for you or bond picks or anything like that. Manage any portfolios. This is just informational and a place where you can come together and or at least see this data in a graphical user interface. So this is where it's really at for the user. When you have an account, you can update profile like email, name, and stuff like that. But in analytics here in the research companies now, as of right now, our databases are updated to March 11th. We try not to put too much load on the database. And then, a total of 16,789 US based companies that register with the SEC, Securities and Exchange Commission. So you can do your search by CIK number, which is an Edgar generated number or SEC generated number, or you can do it by the company name. So in this case, like say if I wanted to look up Meta, and I don't have to do it by uppercase or lowercase. There's going to be a lot of metas in the database. So 55 it pulls, and I'm looking more specifically for meta platforms. So here it's got the CIK, and then I can go and view. Now, one thing you need to know is you have to have pop-ups enabled, um, and JavaScript. So JavaScript is another requirement for this to work. So ensure pop-ups are enabled to view this data. And let me see, I may be able to refresh it. Nope. But it's going to require JavaScript. Now, so you have these different statements. A company like Meta is U.S. GAAP. Other companies are going to be in sometimes they have both. Sometimes they have U.S. GAAP. Sometimes they have IFRS full. So I'll pull up another example. Say Honda. Actually, let me do Toyota. Toyota. I spell it right. All right, Toyota Motor Corp. Now they have a Motor Corp or Toyota Motor Credit Corporation, which you can also, feel free to look at that as well. But the main Toyota Motor Corp here, they have their IFRS full up front, and then they report their profit or loss. And so you also have to be aware that, some of these companies, they have, both reporting standards. Sometimes, one or the other is dated. Usually it's US GAAP if they're a foreign entity like Toyota. So I'm gonna do the profit loss statement analysis, and I want to see the 20F, which 20F is, in IFRS, there's a 20F and the 40F. Those are your annual statements. So it pulls up for me in a pop out, right? You have to enable the pop-ups. It pulls up for me what that report brings, right? These last years of data recorded. So I have, and plus a really rudimentary 3-year estimate, right? So from March 2023, the last time they've reported was in March 2022. So now it's going to be March 2023. And so it's estimating 2.8 trillion yen, right? 2.8 trillion. And then it's steadily rising just based on off a simple regression analysis. So And again, you have to really look at this. It's the name of the company, the CIK profit loss statement. Currency is in Japanese yen, so Japanese yen trades, pretty high compared to the dollar, the U.S. dollar. You have to kind of bring this to a dollar comparison to compare apples and oranges, right? But relatively quick, definitely beats going into the SEC Edgar database, which I can see if I can get it. Not, oh, I put DEC and it found it for me. So DEC or SEC Edgar database, if you were to look for company filings, you can look at here, Toyota and Toyota Motor Core, and it takes quite a bit, right? So you would basically have to go in and let's see, 20, I think you can even filter it. Let's filter it by form. Nope, wait a minute. Yeah, let's see. There it is, 20F. So 20F, 2022, let's see. And let's see if we can do, nope. It's a little bit janky to say the least, but this one looks like, yeah, reporting date, so 2022. We go in here, and then if you wanted to do this analysis on your own, you're going to be going through a lot of, information. Just look at profit loss. Let's see if we can look up or search for the keyword to see if we can find profit loss. We couldn't find profit loss, but I know it's somewhere here. One of these statements has it. And it's just, it's a lot of data to go through. Let me see. Maybe that was the statement. Profit loss. Nope. But you would have to go through this SEC database. And here it is, consolidated comprehensive income. And it is a lot of reading and sifting through to try to get to this data where I feel it's just much easier to put it in a chart and see it, right in front of you, right? So yeah, this is definitely, you know, something that's an option as well. If you don't want to use a more graphical tool, but the information's public, to say the least. It's public, and you have to remember that for that particular company, it's reporting in Japanese yen. Now, the thing I really like, and this is what I've done, for my wife and I, our plans, our plans for investing. My idea is that I don't want to, give a company my money, especially if it's an expensive company, per share, since the share price really is only, its par value is fractions of a cent, right? And they can have millions or even billions of shareholders sometimes for some of these big companies. So I want to know if I'm investing in a company that they're putting my money to use and they're paying me for it. It's not an interest-free loan, right? So a bond, shouldn't be a zero coupon bond. It should be something that's paying you interest. These companies, these financial or these publicly traded companies, they're so powerful and they make so much money, and some of them don't even pay their stockholders. They pay it based on increase in the stock price, which is speculative. So I like this tool right here that we've included. This one doing, a big search of all the entities in the SEC database and returning the top 100 dividends paid, given the last couple years, reporting years. So this one's nice. It has, the currency, it's all going to be US dollars. We prefer to leave it in US dollars because some of the other companies, they report in Japanese yen. It kind of convolutes the data. How much, the per share amount was, the statement, and the form. So this is annual right here, the form. So common stock dividends per share, cash paid. Now this one's kind of an outlier. 27,900,000. It's probably very few shareholders of the Permian Resources Corporation. I will grant you that. Same thing with Chicago Atlantic Real Estate Finance. Probably very few shareholders that are going to get this, right? Maybe a very small group. But then you start looking at some of these other companies, right? Like you look at Whirlpool. Whirlpool's Fortune 500 blue chip stock. They pay $7, right, in 2022 in their annual statement to common stock holders, right? So you click on this link and you go and say, well, how many common stockholders are there, right? As of the last report, 10K. So they're steadily actually going down. They're reverse trending, right? They're going from having more to less. So there's going to be more money to spread, right? So now the regression analysis has it continuing a downward trajectory. So in 2022, they had 58,000, I'm sorry, 56 million, almost, or 58, I'm sorry, 58, my numbers are getting wrong. And it estimates by, well, this year they reported 54. So that's a good sign. That's a good sign. There's less stockholders, more money to go around, right? And they're probably not doing like some of these other companies that don't pay a dividend, but they want your money. It's just based on a speculative stock price, like Apple, like Meta, which are very speculative. They use that money to reinvest in their stock, right? To do stock purchase or buybacks to boost the value of their stock artificially, right? So nowhere on this list, right? Nowhere on this list will you find, say, an Apple, right? You will not find an Apple because Apple doesn't pay a dividend. I think they just declared a very small dividend, like a quarterly, and it's cents. Um, these companies are companies that are healthy, publicly traded companies, right? Blue chip stocks that pay their stockholders for investing in them. And I think that's important. I think that's critical. Now, the other interesting one is the top 100 net profits, right? So the top, in US dollars, the most profitable companies given the last statement, right? So Apple, of course, everyone knows Apple makes a boatload of money, right? 99, almost $100 billion reported in 2022, right? Yet they don't pay a dividend. And they also, they issue zero coupon bonds. So what is Apple doing with all that money, right? Microsoft, I'm not sure. It didn't make the top 100, but I don't think that Microsoft pays a dividend. Neither does Alphabet, right? Now, ExxonMobil does pay a dividend. I know that for sure. These energy companies pay dividends, right? They're up there for a reason. Pfizer, I'm not 100%. Meta, I'm sure doesn't pay any dividend at all, especially now. But you start looking at some of these companies, right? And we could really do the reverse and look at some of the companies that are in reverse order the worst performing, like Rivian. Rivian's another perfect example. Not sure why anyone would invest in Rivian, given that they don't pay any dividend, right? So they don't pay you for investing in them. They're burning through cash. They essentially are like the fifth least profitable company. They're in the negative in billions of dollars, right? Out of the entire SEC database. Why on earth would anybody want to invest in them? So let's dig into Apple, right? Let's dig into Apple. So let's look at their common stock, right, that they've issued over the last reporting period. So now we see with Apple, what they're doing is through stock splits, where you saw in Whirlpool, it was what, 54 million, 56 million, you see up here with Apple, it's in the billions, in the billions. And that's because they're splitting their stock. They're taking a lot of that cash that they earn from this artificially high stock price to buy back stock to make it look even more lucrative in the market, right? So it's crazy, but they're not paying you for it, right? And let's go ahead and let's see, purchase of stock, repurchase. So we can look at something like purchase. Let's see, long-term purchase, payments for repurchase of common stock. Now, this is going to be pretty interesting, right? So payments. Now you're look at all this money they're pumping into just to boost their stock, right? 80 billion, 85, almost 86 billion. Payments for repurchase of common stock. Think about it. If their net income is 99 billion, but they're using the majority of that money just to boost their stock, right? And they don't pay dividends and zero coupon bonds, why invest in Apple? Why? Now, again, we're not financial advisors, um, but this is stuff that retail traders, I think this is information that could help retail traders and even maybe some professional financial advisors to help their clients understand what the market is doing. If you listen to Jim Cramer, CNBC, a lot of those people, they're just playing, they're basically Ponzi's for Wall Street, right? They're just playing the common narrative, right? Let's boost the stock, and then we can dump it or short it, and the retail, basically Main Street America, eats the pie, or basically pays the price for it, just like GameStop. I mean, you look at GameStop, it was a mind blower how anyone could think that GameStop was a good purchase. I mean, they're it's a dated business. It's not, they become basically, I mean, look at this is their earnings. I mean, they're all over the place. And even in the past, they've just been losing money. Some years they reported, some net profit. Then other years and other quarters, or it could be, these can also be what's like an adjusted statement that they had to report to the SEC. No way in heck that I'm going to invest in a GameStop. No way. I mean, it is a dying company, a dying, I wouldn't say industry, but there's other methods, other manners for people to get their digital entertainment that don't involve going into a store. So I hope this video helps. And like I said, this is something that's, really in beta, but I hope that, it could generate some interest and help mainstream retail traders like myself, understand some of this data and put it there in your hands rapidly, and in an easy format to digest. So again, thank you for your time, and we hope you'll visit our site.